Welcome to the Big Four Accounting Firms podcast brought to you by big4accountingfirms.com. Now, in today's podcast, I wanted to revisit the Big Four breakup. Now, if you've been paying attention to global markets, they have not been doing well recently. They've been doing terrible, going down 4 or 5% in a day, and interest rates going up. And because of that, I think all this news about EY breaking up and the Big Four breaking up, I don't think that's going to happen anymore. I think it might be advantageous in some respects because the existing Big Four partners at the insurance level and the tax level, if they get rid of consulting, would get a one-time payout and they wouldn't have to see the decline in revenue from consulting. But on the other side, consulting isn't going to be doing too well if there's a recession slash potential global depression due to supply chain shortages, etc., inflation that's out of control due to fewer supplies, fewer items out there in the market, increasing energy costs, etc. And so I don't know if the consulting partners will want to break out on their own now. They probably want that steady stream of audit revenue and tax revenue to supplement them. And plus, I don't think anybody really wants to do anything in a weak market. I don't know if they'll be able to get a deal like what EY was potentially rumored to do. I don't know if they'll get it done. So I think this is going to be the end of the split up rumors for at least until the market gets stronger again. And a lot of people haven't been through a really bad time in the Big Four. There's a little bit of COVID, so people got a taste of bad times at the Big Four accounting firms during COVID. And I've been talking about this over the past year about the potential for a slowdown. But people don't really know what the bad times are going to be like. And we could potentially go back to layoffs again. And depending on how fast this thing goes, the Big Four could start laying people off or freeze hiring. Because there's a lot of companies right now that are freezing hiring and laying off. And they're mainly tech companies. But this could affect other industries, including the consultants of those firms. And some of those consultants are Big Four consultants. So there's a lot of things that could potentially happen over the next few years for the Big Four accounting firms that could show a slowdown for consulting. And since conflicts won't really be an issue in that slowdown, then I think all this talk of Big Four splitting up can be put on the back burner for at least a while. And I think the next year or so is going to be more focused on how a slower economy around the world is going to impact Big Four jobs. But right now, the market is still hot for services. The old way the economy was of very fast moving is still alive and well, and the slower economy has not impacted every single sector yet. But these higher interest rates are impacting tech very quickly because it's not as cheap for them to borrow money. And so all the offshoots of tech, including consulting services, will feel it next. And also the Big Four accounting firms, because of inflation, are increasing their pricing too. So all these various things that come off of a slower economy, extreme inflation, are going to impact Big Four accounting firms, going to impact their services, their pricing, compensation. This should be a crazy year of compensation that we're about to have right now. And then next year, I think, is going to be going back to normal, where it's normal to see 5 to 10%. And if things get really bad, like during COVID, you might have them holding steady the compensation like they did then, cutting bonuses, and just keeping people's salaries steady and freezing hiring. So there's a blueprint for what's about to happen. It's going to be crazy to go from 1 year of insane growth to a year of a slowdown. But the slowdown isn't hitting the Big Four accounting firms yet, but it will. And I think it will shortly. So I think that's what we'll be keeping an eye on. And it'll be less of these rumors of splitting up. You might have a month or two more of the split up rumors, but I think they'll die down after that. So I just wanted to address that as I was thinking about that as I see the markets cratering. And it's not just stock markets, it's cryptocurrency, all the things that come off of that. Like all capital markets, all assets are coming down, which is the goal of raising interest rates. And I think that's the other thing to keep an eye on is these interest rates, because the central banks of the world could slow things down really quickly depending on how fast they raise interest rates. They started really slow raising interest rates, and now they're speeding up. And if inflation keeps popping up, they could raise interest rates really fast, but then that will crater the economy, the global economy. So it's a catch-22 situation. So if you keep an eye on inflation and interest rates, that'll give you an idea of where the economy is going to go. And I would also watch tech companies, and specifically the NASDAQ in the US, to see like how quickly this thing is going to go down, because interest rates affect the NASDAQ more directly. So it's going to be very interesting to see what happens. And that'll give you an idea of what's going to happen in the Big Four. But the other thing I'll say about the Big Four is they're more resilient, because people need the Big Four accounting firms for services, especially releasing financial statements, et cetera, complying with governmental rules. And governments around the world are going to be still trying to raise tons of money, still trying to regulate. So there's a lot of services that companies are still going to need from the Big Four accounting firms to access capital markets, et cetera. But that's the podcast for today. Make sure to subscribe to this podcast for future updates and check out the show notes for useful links. Thanks for listening.